right, welcome to another episode of the Hustle Harder Show. I'm James Gaskin, Managing Director of Corporate Development and Partnerships for Renovo Financial, and super excited to have my two guests on today, Tiffany Taylor and Aloni Harris. And Tiffany and Aloni run the C3 Impact Fund, which is a subsidiary, I guess, of Renovo, and it is a CDFI, and we'll talk about what that is. But really excited to have these ladies on. They're making a tremendous impact in a lot of the communities that we support at Renovo, and we're really excited to dive into what you guys do, what's behind the mission, and all of the amazing impacts that you guys are making. So thank you for joining us.
Thank you
for those who don't know, we actually have recorded this episode once before. And due to the limitations of our prior engineer, that was me, we had some of the audio files were not usable. I learned that some of the mics that we use can also pick up radio signals, and basically all you could hear was Christmas music from our office lobby. So we're doing it again. And the first conversation was absolutely fantastic. And I'm excited to recreate the magic with you both. So excited to jump in. Let's start with some introductions. I'll let you ladies introduce yourselves, a little bit about your background and what you do with C3 Impact Fund.
Hello, everyone. Happy to be here. I'm Tiffany Taylor, the Executive Director of C3 Impact Fund. And my role as the Executive Director is primarily, overseeing our mission, strategy, and operations of the organization to ensure that we're having impact in terms of what C3 stands for, which is catalyzing development in low to moderate income neighborhoods, creating local jobs, and closing the wealth gap.
And I'm Aloni Harris. I'm the loan officer at C3 Impact Fund, and my primary focus is deploying capital, but also building and maintaining client relationships, knowing or maintaining opportunities to connect with resource partners across our various markets and continuing the mission of C3.
Awesome. Well, it's a really important mission. And I think for most people, and I would actually put myself in this category as well, CDFI is not something that you hear all that often. And I think there's maybe a little confusion about what a CDFI is. So could you tell us and tell our audience, what is a CDFI? What's the purpose? And what makes it a little bit different and unique?
Yeah, absolutely. CDFIs, we were created in the 1970s to address the issue with traditional banks with providing financial services in low to moderate income communities through like discriminatory practices like redlining, where they decided, these neighborhoods are too risky for us to lend in, or these borrowers are too risky for us to lend to. So CDFIs were created so we could provide financial services to those communities. And it's critically important because these are the organizations that may have looser standards to underwriting to our borrowers that are, actually those small business owners or those local community real estate investors, to provide them with not only financial services, like in terms of access to capital, but also technical assistance so they can grow and scale their business.
That's a really important piece of it, right? So, effectively, the idea is that, we create a lane that is able to go into neighborhoods and work with borrowers that maybe historically have been overlooked, right? And don't have access to maybe all of the opportunities and options that other folks might. So obviously we sit here today in Chicago, where Wrigley Field is just down the street. And Chicago is, has a lot of opportunities for this type of thing. And I think it's really amazing that, the CDFIs, I mean, I've been around at Renovo for a long time now, and I know we worked on this, getting this CDFI set up. It was not an easy task. It's actually a very difficult thing to do. And we spent years getting all the pieces in place to be able to actually do what you guys are doing today. And I think it speaks to the focus that we have on really making an impact. I think there's a lot of opportunities to make loans to real estate investors, but to go through all of the work necessary to build the CDFI so that we can, go deeper in some of these areas and really help these communities, is really great. And shout out to Renovo CFO Dan McLaughlin. This is a major
shout out to Dan.
passion project for Dan, and I know he spent a tremendous amount of time, putting all the building blocks together. So very, very cool, and I think what you guys do is really amazing. Tell me, C3 as a name, right? Is that obviously has a meaning, and there's something behind that. What is the origin of the C3 name?
Yeah. So when we first started off, so C3, we was created, like Renovo has been doing loans for over a decade now. And they were doing loans organically in these low to moderate income neighborhoods. And through conversations with their like advisors, and we were already doing a lot of lending to like land bank properties here in the Chicagoland area. And then someone said, like, have you guys ever thought about becoming a CDFI? And to your point, shout out to Dan. He did the work to look into the CDFI industry, and we became a certified CDFI in 2018. And originally, C3 stood for Chicago Community Capital. And as we've grown, we're actually in 5 cities now, or we cover 5 markets now: Chicagoland area, Texas, North Carolina, Boston, and Florida. So as we've expanded, we've changed the name to C3 Impact Fund, and that stands for catalyzing development in low to moderate income communities, creating local jobs, and then also closing the wealth gap. And we do that through providing those loans to community-oriented real estate investors. Like, our product is short-term financing, like bridge loans, acquisition, rehab loans, and in addition to new construction loans. And the exit strategies for our borrowers, they're either paying us off because they're selling it to a homeowner, or they're refinancing it to keep it as a rental property.
Awesome. Thank you for explaining that. I know, and that's a great point, that, Renovo has been very active in a lot of the communities that C3 focuses on historically. And I think, going the CDFI route just allows us to be, to do some things that we couldn't do in the past in terms of the way the loans are structured, the pricing. What is, explain what is the difference between, a normal loan that Renovo might offer to an investor, and what you guys are able to do through the C3 Impact Fund?
And so for C3, what differentiates us from Renovo or even some of our industry peers is we're laser focused on the smaller community-oriented real estate investors. So we're thinking about the ones that are focused on the 1 to 4 unit asset class. And we're just doing 1 to 4 and those bridge loans. And that compares to Renovo, where you're doing bridge loans, you're doing properties up to 50 properties, as well as there's mini perm options, 30-year mortgage products. And what's beneficial to our clients as well is that even though C3 is only focused on the short-term loans, if we do have a borrower that wants to refinance and keep it as a rental property, we can refinance that in-house, and they can still utilize Aloni as their loan officer. We don't necessarily need to transfer them to a loan officer on the Renovo side if they want a 30-year product.
Terrific.
And just to hop into Tiffany's point earlier, there's also that added piece of us being a CDFI and having a bit more relaxed parameters surrounding what our requirements are. So for C3, we require at least 2 projects completed in the last 3 years, or taking in consideration relevant industry experience. That would be your general contractor or your broker who's trying to get into the game of fix and flip or get into that investment for themselves. We acknowledge that comes with some industry knowledge and can get comfortable doing their second deal so long as that first one was in the last 12 months. So reducing and relaxing a bit of those experience parameters, as well as credit and financial parameters as well.
Yeah, so making the loans more accessible, right? Expanding the box a little bit, and taking into account some of these other things that might help somebody, have success in one of these projects that, and somebody that might not qualify under Renovo's normal guidelines, right? So expanding that and helping more people through those, more relaxed or slightly expanded lending box. I think that's fantastic. we're going to come back to some of the C3 stuff because I think, obviously we want to really talk about how, the impact you guys are making. And I'm very excited to talk about some of the resources and education aspect that you guys have built around, the C3 Impact Fund to further help our clients and prospects, et cetera. But I think each of you have super interesting stories. So I think, a lot of the interviews we do on this show are, really talking about, individuals and their background, their story, kind of how they got to where they're at. I find that to be really interesting. I think each of you have a really interesting stories on your own. So I'd love to dive into some of that. And Tiffany, maybe we'll start with you. Ever since I've met you, and I think we started at Renovo around the same time.
Yeah.
It's always been very apparent that you have a tremendous amount of passion for what you do here and what the mission of C3 is. Where does that passion come from for you?
I would say that passion comes from lived experience. I myself was experienced housing insecurity growing up. My mom worked 16-hour days, 6 days a week. And I remember distinctly her only off days were on Tuesdays. And even with her working 96 hours a week, we still could only afford sometimes a 1-bedroom apartment for, the 5 of us. And so I know what it's like to have housing burden. And I lived in various neighborhoods, and I lived in various neighborhoods that C3 actually lends to. So I've lived in Auburn Gresham on the south side of Chicago. I lived in Chatham on the south side of Chicago. I've lived in Inglewood on the south side of Chicago. And I even lived in Rogers Park, not too far from here, on the north side of Chicago. And Aloni can attest to this. Sometimes we meet people and they're like, "Where are you from?" And I'll say, "I'm a citizen of the world." And I jokingly say that, but, as a child, moving around that many times, because, rent goes up, we're moving. And so by the time I was in 5th grade, I went to like 3 different elementary schools. I went to 2 different high schools, and adapting to those different environments felt like a world of difference sometimes. So to be in a position now where I can be intentional about lending in the very neighborhoods that I grew up in or similar to, and lending to borrowers that are reflective of those communities and have ties to those communities, and to also be in a position to go to those traditional banks, because part of my job is capital raising. So I'll go to those banks and it's like, I understand that for this asset class, you may think it's too risky, or you don't like the neighborhoods that we're lending in, or you don't like the financial credit profiles of the borrowers, or you don't like the fact that the loans are too small, because our average loan size is only $225,000. So that might not be the parameters for a traditional bank. But, I can go to them and say that while you may not want to do these loans, what you can do, and so you can achieve your CRA, Community Reinvestment Act credit, you can invest in C3, and we will be good stewards of your capital and deploy the capital and make these individual loans to the borrowers. And we've been able to do that very well. We've done it incredibly well. Since 2018, we've originated $70 million in loans, and that equated to 4,000 jobs created and over like 500 units of affordable housing or workforce housing. And these are all in low to moderate income neighborhoods, and all to borrowers from those communities. So we've been able to prove that we've done this, and we've done it with 0% delinquencies and 0 charge-offs to investors. So we've been doing it pretty well. And that's gives me the sense of fulfillment to see the impact that we have in these communities.
Absolutely. Absolutely. I think that's incredible. And I love how you've been able to figure out what the job creation impact is. I think that's such a powerful statistic. For those who don't know, what is CRA? Because the backdrop of this, right, is that banks have some regulations that encourage them to invest in the communities where they have a footprint, right? Where they have branches and things like that. And that's a major driver or catalyst to, the investment that we're able to secure for C3 and then deploy. So what is CRA and how does that factor into what you guys are doing?
Yeah, so CRA is the Community Reinvestment Act. It's like a law that requires banks to lend and have financial services or products in underserved communities. And so, and if they don't do that, the repercussions of that is they could have reputational risk. In addition to, there could be financial fines to them as well if they're not doing it. So they can either choose to do it organically through their own lending and investment, or what they could do is lend or invest to CDFIs like C3 Impact Fund and still get the credit for those investments.
Yeah, it's a really, really powerful program for folks who don't know. That CRA program and the requirements that banks invest a certain amount, I think based on their
Tier 1 assets.
Yeah, exactly. Really does drive a lot of investment in areas that maybe wouldn't be as attractive to developers. Both what you guys are doing, which is kind of on the individual asset side. My mother is a developer of low-income housing, multifamily projects that utilize low-income housing tax credits. That's another way that banks can achieve their CRA goals. And these are programs that really drive a lot of impact where, the traditional market rate deal may not work. And so it's really, really important in terms of supporting all of our communities, not just some of them, right? And I think that's a really important aspect. Aloni, let's move over to you. I'd love to hear more about your story. I think you have a phenomenal story. Where did you, how did you get started? And how did you end up here with us at C3?
Yeah, absolutely. I will just echo Tiffany's sentiments and just saying that the work that I do is also driven by lived experience and just knowing that you're from the very same neighborhoods that you're supporting, right? So I grew up in North Pullman, Roseland area of the south side of Chicago. Just in my life, had the opportunity to grow and thrive, but also be impacted through violence in my immediate family in that very same neighborhood, right? And just knowing that a lot of the things that I experienced, including lack of a grocery store until maybe 2015, 2016, and just an actual neighborhood, all of the things that you are told that makes a neighborhood not exist in the neighborhood that I grew up in. And fast forward going to school, I know you're going to bring this up. So I attended Yale. And while there, going back and forth between a literal castle to, Roseland is like day and night. And one of my biggest drivers has been my identity crisis that I went through throughout those 4 years. Seeing both sides of privilege and then just complete disinvestment. And one thing that I did know, or one thing that I always knew, is that I wanted to work in the same community. I wanted to make an impact. I wanted to maybe not change Roseland into a castle, but at least bring some opportunities, or at least acknowledge that these communities are not necessarily in the conditions because of inherent faults of the members of those communities. It's really strategic disinvestment that has led to that. And while in school, I was taught that summer can be a verb. And at the time, I was a freshman and working at Mariano's in Bronzeville. It had recently opened. So I was working at the Mariano's, and a lot of my friends around were like, "Oh, what are you doing for the summer?" And I was like, "Oh, I'm just going to go home and work." And they're like, "Oh, well, I'm summering in, insert exotic place." And that's when I thought maybe I'm not necessarily doing enough. And maybe I did not necessarily have the knowledge to do enough, but I did know how to use Google. So what I did and what I was intentional about from the very start of going to school was I wanted to make an impact. So I Googled initiatives in the Chicago area, and one of the first companies to pop up was my previous employer. Within that company, they were a developer who focused on providing commercial real estate or commercial opportunities in neighborhoods such as myself. They operated right within Pullman. They created and they were the developer for the horizontal work of the Walmart that brought the first grocery store in my neighborhood. So I was like, well, let me see how I can get involved with them. Fast forward, I was fortunate enough to be, well, let me say this. Throughout that time, I just reached out to them on a frequently asked questions box. I tell Tiffany this all the time. I'm like, I don't know how I got here. But I reached out to them and just kind of noted all of the things that they had impacted in my community. And one of the things that I really wanted to highlight was that I just was looking to do some work. I wanted to put forth what I've learned and put forth some actual action behind my thoughts. And fast forward, I was fortunate enough to get an internship at their subsidiary, which was a CDFI focused on small business lending. And just working with small business owners and entrepreneurs who have been told no from banks and have, had to figure it out, go into their savings and try to get this business started because everyone kept telling them no. And hearing the passion behind their work really made me realize the importance of CDFIs from that moment. And I had the fortune to be able to continue to work with these entrepreneurs and throughout college intern. And I've closed my first deal as an intern. It was scary. I answered a call. I went to the executive director. I was like, I want to help this person. She's like, okay, underwrite it. And I was like, I don't know. And it really led to me becoming a small business loan officer through CDFI work. So my journey has always been in CDFIs. And Tiffany and I had connected a few times. We were on panels and we had seen each other at conferences together. And we came across each other at this conference. It's actually funny. It was like right around the corner from the office. And she's like, hey, how are you doing? I was like, I'm doing well. My office is around the corner. And I was like, okay, I'm interested. And, the rest is history. And it definitely is being at C3 is a continuance of my passion to support development, support entrepreneurs. And it's actually interesting because at C3, I get to touch not only small business entrepreneurs, but also work in a space of workforce and affordable housing and see the redevelopment of those very same communities that as when I would come back to, quite frankly, I was just like, how can I, continue to go into some communities that's so disinvested and then experience life in behind large gates.
Yeah.
So being able to see quality housing being brought to those communities by investors that are from those communities that care about those communities is just all inspiring.
That's fantastic. One of the things I love about Renovo and the culture that we've built with the firm is we have a lot of, I think, very authentic people, right? I think authenticity, integrity, are really a common thread that you see with a lot of the people that join our team. And I think it makes Renovo an incredibly special place to work.
Mm-hmm.
But that is, no one embodies that more than the two of you. And these stories are very eye-opening in terms of, where that passion comes from, but it shows up every day and, really appreciate the work that both of you do. One of the things I think that's really neat about the C3 Impact Fund is the educational component, the additional resources that you guys have come together to provide to these communities, right? Whether they're borrowers of C3 and Renovo or not. And I'd love for you to talk a little bit more about those initiatives. I think you guys are doing some amazing things. So what does that look like? What type of resources and support are you all providing? Let's dive into that aspect.
A part of CDFI work is also to impact. So we are not just committed to lending, but also bringing opportunities. And one of those opportunities was through our real estate mentorship course. Tiffany and Tiffany was here, of course, a bit longer than myself. So she had a lot of more data points. But just in my experience here, I realized that there was definitely a deficit in knowledge for a lot of our investors and a lot of our community partners, and as well as capacity, not because they didn't necessarily have the money or they weren't necessarily able to, but it just wasn't something that they were taught. And um, through conversation between Tiffany and one of our real estate investor partners, DeJuan Robinson, who's been working with C3 on new development as well as rehab deals, he's created and curated a course called the Real Rehab. And through those conversations, he mentioned a lot of his own journey was the lacking of mentorship and guidance. And a lot of the things that he learned kind of just came from real experience and took quite a bit of losses. And that was something that we continue to hear in our own conversations with other investors and prospects, and trying to figure out how to really bring that opportunity together. So the real estate mentorship course was born out of those conversations, in which this course is developed to bring knowledge, bring resources, and allow open conversations about, hey, I don't know this, or maybe, hey, I'm struggling in this particular area, and if I could just get past this point, I think I can be successful. So the real estate mentorship course has successfully completed a first cohort, and we're excited to say we've just started and just launched our second cohort. And the structure is a 6-month course, which includes biweekly Zoom sessions, course content, of course. But also in those Zoom sessions, we bring resource partners to the table. We are bringing, architects, we're bringing vendors, we're bringing lawyers, attorneys, different partners to be able to speak directly to our mentees, which encompasses anywhere from 10 to 11 individuals, to really be able to answer the questions that are, high at mind. But also within that space is a once a month in-person session, which allows them to walk some of the projects that DeJuan is doing. And the end goal is not that we are just giving them this knowledge, but also that we're able to end this course, or even throughout this course, and I'll talk a little bit about something about this a little later, but be able to fund a lot of these investors as well. The end goal is not to just say, hey, this is a bunch of information, figure out what you're going to do with it, but really be able to mobilize that into actual pipeline of real estate investors. I kind of stole that language from Tiffany's comment on LinkedIn, but really be able to develop a strong pipeline for community focus and community based real estate investors to grow and thrive.
Yeah, we wanted to be really mindful of not just overly mentoring these participants, but also providing them with that access to capital. So C3, we're committed to actually waiving the processing fees for our participants' first deal as well. And another thing we wanted to be mindful of too is sometimes you see the personal financial statements of real estate investors, and you're not necessarily able to reconcile, changes to their net worth or their liquidity positions based on how many projects they've completed or buy and hold transactions. So we also wanted to bring in wealth management and tax saving strategists to educate them on what to do with their liquidity after they've had an event. So that's the other piece that we're being mindful of as well.
Yeah, I mean, I think that's incredible. Like kind of that 360 degree level of support, right? Because it's the capital is obviously hugely important, right? And making that capital more accessible to folks in these communities to be able to do these important projects. But I mean, listen, we all know it's not a one-man show, right? Or one-woman show. It takes a village to get these projects done. And there are a lot of people involved. You mentioned architects, you've got, attorneys, and all of the, the contractors and permit expediters and, all of that stuff. And, without those relationships and knowing who you should be, there's a lot of people out there doing this stuff. Not everybody is equally good at it or has your best interests in mind. Right. And so, that's a big part of the learning curve, I think, for any investor is building a network and a team, whether they're on your payroll or not, that can help facilitate these deals and get them done the right way, because the wrong partner can be costly, incredibly costly. So the fact that you guys are really intentionally creating those connections, I think, is of massive value. But then, the back end of that, I think a lot of people forget about, right? How to manage that money and what to do with it, how to do so efficiently, so that our clients and investors can keep as much of it as possible and continue to make a bigger and bigger impact over time. And the fact that you guys have really taken that aspect and incorporated it into what we're doing. Of course, we are capital providers, and that is that's our DNA. But to recognize those other needs and to create a support system, and shout out to Dewan, because that's very selfless of him to spend his time to help mentor these folks and take them on these tours and help people see around some of these corners, because when you're getting started, it can be one project that goes wrong and it could totally take you out of the game. So for somebody to take that upon themselves to really give back, I think is an incredible gift and really, really important aspect of what you guys are doing.
And shout out to my funding partners. Our first cohort was sponsored by JP Morgan, and our second one was sponsored by Federal Home Loan Bank of Chicago.
Awesome. Yeah. Of course, without the support of sponsors and other folks that, are interested in furthering the mission, it's a lot harder, right? Again, nobody's doing this on their own. So really, really important. You've mentioned the home loan, the home loan bank, and the land bank here in Chicago. I think those are really important. What is the land bank? I don't know that every city has a land bank. I could be wrong about that, but I know the Chicago Land Bank is a big deal. And how does that, factor into what you guys are doing and what our clients are doing in these neighborhoods?
Yes. So the Cook County Land Bank Authority, it's a government organization that basically exists to acquire distressed properties or vacant land. And what they do is clear the title. So tax liens, water liens, things of that nature. And then they sell those properties to either homeowners or real estate investors that are committed to the community. And they can acquire these properties at below market prices. And we have an incredible relationship with the land bank. I would say probably about 85% of Aloni's clients acquire properties from the land bank, and they can get properties for, a 4-unit in Inglewood for, $20,000 or so. And then we could give them the funds to not only acquire the property, but also rehab it and put these properties back on the market.
Yeah, and really amazing. That is an amazing, I don't know what you would call it, group, office, whatever program, because it really knocks down a lot of those barriers and makes those assets, more attainable, right? And a lot of these deals just simply don't work when you're acquiring a property that has, a ton of back taxes and a bunch of other liens that you've got to clear up as the owner before you can start rehabbing the property. So really knocks down a lot of the barriers to acquiring the assets and then being able to develop them and in that process redevelop these communities in a way that makes sense and can attract the investors to actually do them. So I think that's really cool. And I know Cook County Land Bank has been a fantastic partner for us. I had no idea that the majority of your clients actually acquire through the land bank, but that's a really cool stat. Tiffany, a big part of your focus as the executive director of C3 Impact Fund is fundraising. So, for anybody who might be listening that is, in a position to potentially be a financing partner for us, talk to us about what you're looking for, and anything that might speak to that audience, because I know, that's a major aspect of what you're trying to do is line up the investors and folks that can provide us with the capital to go out and lend and impact these communities. And obviously, we're going to get into your goals and some of the things that you guys are looking to do as you expand. But that's obviously a critical component.
Yeah, absolutely. So since I've been in my role, which is about 4 years now, I raised about 16 million in capital, and that's primarily been from banks as part of their CRA investment strategy. And a little background on me: prior to leading C3 Impact Fund, I came from the banking world. I worked at JP Morgan as an intern all throughout college, and then I was an intern in private wealth management, and then I was an intern in the investment bank operations, and that led to me having a full-time job there as a trade support analyst. And then I became a loan officer within like syndicated loans, and then I was kind of looking for more sense of fulfillment. So let me start over.
Mhm.
What was the question again?
Uh,
Fundraising.
yes.
Yes. Okay. So part of my job is fundraising. Since I've been here, I've raised about $16 million in capital, primarily from banks as part of their CRA investment strategy. Prior to joining C3, my last role was at a bank. I worked at Wintrust Financial, a community bank here in Chicago, and my last role there was the CRA investment officer, where I was responsible for $250 million portfolio of investments that either created or preserved affordable housing or created or preserved jobs for low to moderate income communities. So that's where I got my interest in the CDFI industry. I had a lot of CDFI clients within my portfolio, and I was responsible for making investments to organizations like CDFIs, SBIC funds, low income housing tax credits, et cetera. So now I'm on the other side of the equation, going to the banks, raising capital, and I've raised about 16 million. My goal is to continue to raise capitals from banks, but also diversify the capital stack to also include capital from other types of mission-oriented investors, such as high net worth individuals, family offices, foundations, or even corporations that have a impact investing strategy that aligns with C3's mission.
Gotcha. So that's fascinating. So you were on the other side, and you were evaluating lots of different avenues to invest from the CRA perspective, including CDFIs. So you've been able to sit there and really evaluate and look at different options. What is it that a bank and someone in a role like yours, deploying CRA capital investments, what is someone like that looking for in a partner or a client to deploy capital to?
I would say they're looking for you to have a track record, you to have experience doing what you're saying you want to do. Just to date back to when C3 was first started, we had a really challenging time raising capital from anyone, let alone a bank, because they were like, you don't have a track record under C3. You know, we understand that you're affiliated with Renovo, but now C3 is explicitly focused on these particular neighborhoods and this asset class, and we want you to build your own track record doing that first before we will lend or invest with you. And so PNC Bank at the time was the first bank to actually give us capital, but they didn't give us capital for acquisition and rehab lending. They're like, hey, fund those deals yourself because it's too risky. But after those properties are stabilized, if you have any borrowers that would like to refinance with a mini perm option, like a 3 to 5 year term loan, then you can use our capital to make those loans. So it started off with that relationship with PNC doing takeout financing for our bridge loans. And when I joined the organization, I was able to build a relationship with Woodforest Bank. It's headquartered in Texas, but they have a presence here in Chicago. And they were actually the first bank to give us a $5 million commitment to allow us to do more acquisition and rehab lending. So shout out to Nisha at Woodforest. And that relationship grew to, I want to say, almost 10 million in commitments. They were the first ones to allow us to go into the new construction space as well. And then since then, we've been able to raise capital from other banks such as US Bank, CIBC, Providence Bank, Key Bank, and am I missing anyone else? Well, we do have a $3 million commitment from another bank right now. But as you know, in real estate, you're not closed until you're closed. So I'll hold off on mentioning them.
There you go. A little suspense for our listeners.
More to
Excellent.
come.
So you mentioned some of the markets that we've expanded. Obviously, C3 started, focused on Chicagoland. We've expanded that. So run through those markets again. And then I'd love to dive into some of the impacts. I know you are amazing at pulling together all these statistics that kind of show the impact that we're making. I'd love to talk more about that, but let's start with the markets that we're focused on today and where we're currently lending.
Yes. So we are in 5 different markets today. Our goal is to become a national CDFI. So Renovo is in 30 or so markets. So where it makes sense, C3 has entered into markets where Renovo already has a presence. So we're in Texas. Actually, we did 42% of our lending in Texas last year. We're in North Carolina, Boston, and Florida.
Excellent. And when we go into new markets like that, typically that requires new investors, right? Because again, for those who aren't as familiar with the banking world, CRA is intended for banks to reinvest in markets where they have a footprint. So if they don't have branches in that city, then that bank really is limited in the ability to inject capital. So when you go into these new markets, are you having to find new banks, new investors that can support us as we expand?
Yeah, absolutely. We definitely have some geography-based investors where they're saying, hey, we want to deploy our capital in the Chicagoland area, in Texas area. We even have banks that may say, hey, we're particularly interested in these 20 zip codes on the south side of Chicago. And even with the bank that I mentioned that I'm in due diligence with right now, they're particularly interested in the Dallas region. So we just meet our investors where they are and see what makes sense for both of us.
And as you look to continue to grow C3, you mentioned, obviously banks, have the CRA incentive to direct capital into what you're doing. But I know there's a big push to try to expand our investor base outside of just banks. So, who's a fit? Who are you talking to? Who are you looking to meet? Maybe some of those people are listening to the show. What does that look like? And what are your fundraising goals as we look forward?
Yes. So if you're listening to this, we need money to continue to do this work. I'm looking for impact investors that care about a double bottom line where they're interested in not only getting a solid return, but also seeing the impact of their investment as well. So family offices, high net worth individuals, corporations, foundations, anyone with an impact investing strategy that speaks to C3's mission.
Excellent. And, you guys are doing amazing work, and I'd love to touch on a little bit more of that. But before we jump to that aspect, are there any markets that you're looking to expand into where we are looking for new investors and, folks to help us pave that path?
For now, I would say we've done an incredible job at lending in the Chicagoland area in Texas, and we're looking to spend more time in the other markets that we're in, like Boston, North Carolina, and Florida. Alani was just in North Carolina, 2 weeks ago? So spending more time in those markets and continue to make more impact there.
So right now, the immediate focus is going deeper in the markets we're in. Obviously, Renovo is a very local lender. That's a massive focus of ours, is really being local where we lend. We're, as you mentioned, we're in over 30 markets now. But I can imagine as we fast forward through the years coming up that, we'll be looking to expand into some new markets, but always looking to go deeper in the markets that we're in.
Absolutely. And I guess I would say too, that to your point, since Renovo is in those 30 different markets, if there's any type of impact investor that has a need in one of the markets that's outside of the 5 markets that we're already in, we can easily go into a market that, Renovo already has a presence on the ground We just need that dedicated capital to do so. So if we have someone that wants us to do more loans in Atlanta, we can easily do that. Give us the capital and Alani will make it work.
Well, and that's a great point. I'm glad you brought that up because we do have infrastructure built in a lot of markets. And so I think that does lay the groundwork, make it a lot easier for us to expand as we find the right investors and things of that nature. So I'm glad you brought that up. Let's dive into the impacts. I know you have a lot of statistics that you gather on some of the impacts that we're making. Love to hear a little bit more about that in kind of the quantitative aspect of the impact that we're making.
Yeah, so going back to like the mission of C3, what we stand for, catalyzing development in these low to moderate income communities. So those impact metrics looks like the $70 million in originations that we did that was 100% in low to moderate income communities. And the second C stands for creating local jobs. So we track how many jobs are created as a result of the lending that we do. So we know that we've created over 4,000 jobs in these communities. And then also we're tracking closing the wealth gap. So we can see that the average net worth of a C3 borrower is $800,000 compared to our borrowers' demographics, which is on the national level is only perhaps 40 to 50,000. So our borrowers, we can see that we're able to close the wealth gap for them by giving them the access to the capital.
That's amazing.
And yeah, I have one more story that I would like to share that speaks to, I would say, public-private partnerships. We had an opportunity to work with the land bank through some of our clients where it started off where we were just lending to them for like acquisition and rehab lending. And they mentioned that they were entering into the new construction space. And I was just going to like their groundbreaking to celebrate them going into the new construction space. And then they called me a couple weeks later and said, "Hey, Tiffany, we want you to be our lender for our new construction." And I'm like, what? I just went to your groundbreaking. I thought this was all like squared away. And they were like, yeah, we ran into some issues getting financing. So we would like you to finance it. And I'm like, we actually don't do new construction financing. We only do like acquisition and rehabs. And they were like, see what you can do. So I took it back to my team and they're like, if you can find the money, you can do it. So I had a conversation with Wood Forest Bank and I let them know that we have a group of 5 developers on the south side of Chicago who previously didn't have any new construction experience, but collectively they had did over 600 rehabs on the south side of Chicago, and they were working with the city and the Cook County Land Bank to acquire 11 lots on 3 adjacent city blocks in the West Woodlawn neighborhood. And if you think about the fact that there was 11 lots on 3 blocks, that speaks to the blight in that neighborhood. And so I was able to convince them that although they didn't have new construction experience before, they had significant rehab experience doing gut rehabs, and they all had strong financial and credit backgrounds, and they gave me the capital to fund. We've actually funded 3 of the 5 developers to do that new construction, and they built 3-unit new construction properties they acquired from the land bank. For the land was only like $6,000, and they were able to build these 3-unit parcels that equated to a total of like $8 million in increased value on that in that neighborhood, and it equated to over 200 jobs being created, and also just revitalizing that community and spurring other development in that area as well. And since then, we have gotten some of our other financial partners to give us capital to do new construction, because the reality of it is in some of these distressed markets, there's a lot more vacant land than there is inventory of properties to rehab. So we also want to infill those properties as well.
Yeah, I think that's a great story because, and I'm so glad you mentioned the scarcity sometimes of actual existing homes to renovate versus the vacant lots where either there was a home and it was torn down or there's never been a home. But in many cases, that's the best way to make an impact, is to fill in, those gaps. And, to do that on that scale, right? How many units was the total?
Like 33 initially, but now
It's kind of grown.
there's probably like 60 new units in that neighborhood.
So
now.
that is we have to double click on that, because, the concept that you can come into a neighborhood, right? They were able to build 3 units on each of the 11 lots. But once somebody does that,
Mhm.
that then changes the neighborhood in terms of perception and investability. So other people now can see that going on and say, okay, now there's new homes, new
Mhm.
comps. They can establish what a value would be, and
Yeah,
that gives
there was no
them.
comps in that neighborhood
That's right, and that's
before.
one of the reasons that what you guys do is so difficult, because you're investing in neighborhoods where the comps don't necessarily support what the actual value could be. But once you get those comps set,
Mhm.
that gives the foundation for everyone else to come in and make investments, because now there's a lot more surety, if you will, or there's a number that they can kind of count on, that has been established through the sales of those units. So that is a really great story, and thank you for making sure that we got it in the
Mhm.
show, because I think that really highlights the value that you guys bring. Right? It's helping come in and establish that these communities are ready for investment and
Mhm.
can be successful investments. And once you set that bar, you open everything up for folks to come in and continue to take that further, right? And the fact that neighborhood, and that handful of blocks now has 60 something brand new units, that completely changes the neighborhood.
Mhm.
And that is incredibly powerful. So it's a great example of what you guys are doing and the ultimate impact, not only on the individuals who were behind those deals, which of course, I'm sure that was incredibly impactful for their personal financial scenario, but
Absolutely.
really creating a neighborhood that, kind of changed overnight, effectively. That is absolutely fantastic. So thank you for sharing that story.
Yeah, thank you.
What are the next goals? I know you are both goal oriented
Mhm.
women. Like what is the next set of goals that you guys are really focused on?
So immediate focus is raising more money to continue to do this work. So we've raised about 16 million in capital that we've leveraged to deploy 70 million in originations. We're trying to get to 100 million in origination. So continue to raise more capital so we can continue to deploy, and also to continue to build the pipeline of the next group of real estate investors.
Yeah, and I think it's kind of a chicken and an egg problem, right? I would imagine that the demand, there's quite a bit of demand, so
Yeah.
deploying the capital not nearly as hard.
Hmm.
Much easy. It's pretty easy to give money away,
Yeah.
right? The trick in the lending business is getting it back. So that's obviously the big thing, but raising the money and being able to have enough capital to go out and expand and serve more borrowers is obviously a major push. And so hopefully, this podcast episode will help get a little
Hmm.
bit more information out there for folks. And we hope that it makes an impact in what you guys are trying to do. Kind of as we wrap up here, what are some final thoughts and anything that you would want to share with the audience on what you're doing and what you're looking to do?
Well, what I will say is that C3 is highly focused on community, and really um, all of our deals start with that conversation, getting to know the borrower. And because of that, we have been fortunate, and of course, through Tiffany's leadership and our amazing asset management team and everyone involved, we have been able to maintain 0% delinquencies and 0% charge offs. So there's definitely, to your point, easy to give money out, but it's difficult to make sure you're bringing money in. And I just want to speak to the partnership and the fact that C3 is continuously focused on not only getting money, but being able to deploy it and being able to deploy it to investors that deserve it. And if I know we have to wrap a little bit, but I do want to just speak a little bit to a client story, if you don't mind,
Please,
kind of
yeah, I think that
wrapping
would be
with that,
fantastic.
giving a visualization of who we serve. Um, so I kind of alluded to this a bit earlier. C3 was fortunate enough to be able to work with one of our clients who was actually one of our first cohort mentees. She was a part of the inaugural cohort. And when we met with her, when I met with her in our one-on-one session, she was really looking to get into the cohort. She was like, my husband and I are starting fresh in this real estate business. And we really dove into her story. And just a little bit of background on this particular client. Her husband and her husband had created a fleet of taxis, of like 70 taxis across the city of Chicago. And they were thriving business until COVID hit. And they were like, well, no one's traveling because we are all in lockdown. But then also, the scare of being in such close proximity, even when, the city began to open up, it just wasn't necessarily as viable of a business for them. And when we were having that conversation, she kind of told me that her strategy had been to find something that's a bit more sustaining, a bit more fulfilling as well. And her husband actually liquidated those taxi assets and started investing in real estate. Um, Throughout that process, she's been able to complete, at the time that we were conversing, about 4 projects at the time, and she was really looking to the point of the mentorship course, catapult herself into a space where she's like, I'm a full-time developer. This is what I want to do. And while we were having those conversations, and I was mentioning like, yeah, this is a mentorship course, this is great, but we're also a lender. So the end goal is that we're able to not only support you through mentorship, but also be able to support you through capital. And she was like, wait, I have this deal. And it was, interestingly enough, a single family home in Jefferson Park that when she purchased, she wasn't aware, but it was about a block away from her home that she was aware of. But what she wasn't aware of was that that same home was previously owned by like her daughter's best friend and their family. And they were all out and, just hanging out. And, as you hang out with individuals, you start talking about life and things that you're doing and what's new in your life. And through that conversation, she was speaking to the parents and she highlighted this project that she had going on just down the street. And they were like, wait, did you purchase my home? And with that, she was not only excited to be able to bring housing stock back to the area, but she was also like, this has a story behind it. I know this family that previously owned it, and I want to not only transition this for a profit, but I want to transition this for home ownership for the next family that's looking to grow and thrive in our community. So we funded that first deal. She's on to doing new construction, and we're excited to explore those options now. But with that being said, she went through that deal while in the mentorship course, and she was able to learn. And Dewan always laughs that she's like, hey, I'm doing this. Can you confirm that this is right? But really speaking to the impact not only of mentorship, but also of capital and being able to combine that together. And with that being said, she was able to successfully sell that property to a homeowner of a family that is looking to enter into their first house and grow and thrive in a thriving neighborhood of Jefferson Park, which just speaks to the volumes of the impact that C3 is bringing, where it's not just money, it's not just mentorship, it's not just impact, it's the combination of all three and having that holistic and 360 viewpoint to support. So if I can leave anyone that's listening to this podcast with that, it would be her story and what C3 is really destined to do.
That's amazing. What a great story. And I think, that's the tangible nature of real estate is a really awesome aspect of this business. And that takes it to a whole other level, right? Having a connection to the home, and really being invested in providing a really amazing place for people to come and, raise their families and do so in a safe and comfortable environment. That's incredible. And hopefully we were able to work with her for a long time to continue to help her make more of an impact in her community. I think it's just really awesome what you guys do. It makes me very proud to be, a member of this team, that these kinds of things are so important. and a big part of our culture, I think, it speaks volumes, I think, to the quality of people that we have, and really, really appreciate the work that you both do. I know it's not easy, and there is a lot of things that go on behind the scenes to make this a reality. So thank you both for doing that work, and I think it's just a really, really incredible thing that you guys take on, and really excited to see the growth and the impact continue to expand into new markets and new families and new investors, and just everything about what you guys are doing is just really, really special. So thank you for all of that. And for folks that may want to get in touch with you, I know, Tiffany, obviously on the fundraising side, Aloni, you're really focused on working directly with the borrowers and facilitating, these mentorship cohorts and things of that nature. How can people get in touch with you? What's the best way to do that? And, certainly any of the social media and other resources that people can access to learn more and get in touch with both of you.
Yeah, you can get in touch with me, Tiffany Taylor, on LinkedIn. My email address is ttaylor@c3.fund, F-U-N-D, and our website is www.c3.fund, F-U-N-D.
Awesome.
And you can also get in contact with me through our website. My email address is Aloni. You can also get in touch with me through our website. My email address is aharris, A is an apple, last name Harris, @c3.fund, F-U-N-D. I'm also on LinkedIn as Aloni Harris and Instagram as AloniB_lending.
And we'll put all of that in the show notes so folks can grab that as they access this content and this podcast. Thank you both for joining. It's really been a pleasure. I'm so glad we're able to do this the right way, with real professionals like Luke here helping us out, making sure this all sounds good. I got fired as the engineer, so that's a good thing, I think, for all of us. But really appreciate you guys making the time to come back and tell this story. I think it's a really important one, and one we're really excited to highlight on the show. So thank you very much. And we look forward to hopefully doing another one. Maybe we can do it another episode this time next year, and we can come and talk about all the growth and all the news stories that we've been able to help cultivate. So thank you very much. And until next time, thanks so much.